Bismillahirrahmanirrahim. Today we are going to discuss the chapter 7, the stages of an audit appointment. Stages of an audit appointment. Okay, look toward the title of the chapter is the stages of an audit. The first one stage of an audit acceptance is the accept the audit. The second is the plan the audit. The third is the understand entity. The fourth is the assess risk material misstatement. Then you have to respond the risk. The respond in the risk in two way. The first one is the expect effective control. There is certain tests over there. If there is satisfactory, then you don't go with the restricted substantive test, and you have to review the financial statement and write the report to the management. And in the case of unsatisfactory, there is, I mean to say that there is a ineffective control. So you have to take a substantive test and give a report to the management, and at the end you have to write the financial report. So accept the audit. First, the first point is the first stage is the accept the audit. Whether or not accept it, accept the audit. There are two fundamental ethical, there are two, there mean to say there are maybe the threat threat of the fundamental ethics. As we studied in our previous lectures, fundamental ethical principles, there may be threat of the familiarity. What does it mean, the familiarity? Familiarity mean to say that you have the familiar, you have the relation. Well, while you are going to conduct the audit, relation in kind of such mean to say that it may be where you are going for an audit, the finance director over there of that entity is your brother or your brother-in-law, or maybe your sister is over there, or maybe he is your sister, he is your brother, and he is calling you for an audit for an company. So what will be, so what will be the result when you will go for? So this kind of situation ethically not allowed you, or allows you on certain conditions for an audit. So you have to think and you have to accept either you will go for an audit where there is a familiarity threat over there, where there is a maybe the self-interest threat is over there. So auditor firm have to check, the audit team is going for an audit, maybe having the self-interest in the entity. Self-interest may be investment having, maybe having the investment in company. So this is the threat. This is a threat of the principle, ethical principle. So audit will be acceptable, or so audit will be conducted or not conducted. You have to do the audit or you have to not. So before you say yes, you have to follow the acceptance procedure. Before you are being an audit firm, being an auditor, accept an audit for an entity, you have to follow the acceptance procedure. Okay, the acceptance procedure is in this slide. Okay, G. So before you are going to say yes or no for an audit of an entity, you have to check the, you have to follow the acceptance procedure. The first stage of an audit. You have to ensure professionally qualified to act, legal slash ethical. Mean to say that you have the professional competency with you to going for an audit or not. Legally, what? what are legally you can say legally what status do you have, what the status you have. Either you have the qualified CA or not, you have the competency or not. So you are from having the license for an audit or not. So this kind of things are legally. And in the ethically, you may say that it may be you have not such expertise, but you go for an audit for that one entity. So when you have not expertise for such kind of industry, so ethically it's not feel sound or it's not feel better. So you have to check either legally it's allowed to you, ethically it's allowed to do. You have to accept. You say yes for an audit. Otherwise, you say no. Adequate resource, staff, and time. Again, there is adequate management expertise with you for an audit or no. If there is adequate, then you will go. Then you will say yes. Similarly, the staff is similar to the staff. Mean to say that you have number of people. How much for an audit? The only you need a team. You need a team of senior audit officer, junior audit officer, assistant manager, officer level rank employees with you for an audit of a company. So either you have the resource of staff with you for an audit. If you have, then you say yes. You have the management expertise and management staff of audit team is with you. The third one and the third point in this is the time. Time is a very important. If the date is 31 December for reporting and you take it up to the January or February, so it's hurt the client because he expecting from you on the set date and you delay it. So, and you're delaying it because of the lack of resources, lack of time, your time, lack of any reason, another reason, you are delaying. So it hurts the client as well as hurts your reputation, company, your company reputation. So you have to assure you have the adequate management resources, management staff, and the time. The fee, third point is the fee, very easy. The, the fee, reasonable fee, the reasonable fee are assigned for an audit. That fee fulfill the requirement of your resources for an audit. Obtain reference, investigate directors. Somehow the auditors are going to investigate all of the financials or all of the internal control of the company. So he is actually exposing himself how true and fairly he will give the report of an audit. So exposing himself, giving the true and fair information in his report, he have to audit the or investigate the directors as well. Maybe the directors having the wealth, and you have to know the about the director's wealth, from where he got, what are the resources he have for this one wealth, this one asset. So you have to investigate and write it in your report. Audit risk. Audit risk is obviously you have to check for an entity. There may be audit risk is very high. So it means to say that you have to keen focus about your opinion when the audit risk of a company is very high. Like I said, the casino business, the cash movement is over there is very high as to the recorded movement. So maybe the cash is misplaced, maybe the cash is theft by the cashier. So when you have to count for, when you have to check, when you have to audit, and the problem is over there. So it means the risk is over there. Otherwise, when you are playing with the documents, the evidence is over there. There is a low risk, and when the matter of the cash in the casino, so the high risk is over there. So you have to clear the risk of an entity. So this risk will be help you to decide whether you will go, whether you will say yes for an audit or for a no. So this is the under the shelter of the acceptance procedure. Money is the accounting reporting framework acceptable? Very simple. It's according to the IAS and IFRS. You have to follow IAS and IFRS standard. Then you will say yes. The companies, if the company is not following, then will you say no? You will not say yes. Money laundering regulations. Money laundering not documented in the entity, not documented in our business. There is no record of money laundering, but it may be the money laundering activities performing in the business. So if you are suspected about the money laundering, so you have to concern this issue, this matter to the authorities, concerned authorities who have to control like FIA, FBR, expertise and competencies. It's like an example of insurance company. You have no expertise or you have no previous expertise for the insurance company, but you say that you will go with the insurance audit audit for an insurance company. So ethically, it's not allow you. So you have to check either you have to accept or not. You have certain such expertise and competency with you for an audit or not. Credit rating of the client is a very important. It's related to the fee. Like if the credit rating of the client is high, so it meaning to say that your fee will be paid by the client slowly, slowly, slowly. You have to check first the credit rating of the client. Maybe the liabilities are high, the assets are low, so how will they pay, how will they pay you the your fee? The last one is the communicate with the present auditors. This point is as once it may be you have to go for an audit in the mid of the year, and the auditor and when you start an audit, already auditor doing an audit for this company, I can say before you auditor doing audit of business for the same time periods for you for whom you are appointed. If you find that the previous auditor resigned from this one job and now you are appointed for the audit, you have to communicate the previous one auditor. Is it may be there is a issue why that one auditor left this job and you are appointed for this job. It may be the high fraudulent activity. So the previous auditor tells you about this one present audit, and then you can decide, you can accept or reject the audit. Now again look toward the appointment flow chart. Appointment flow chart approached by a new audit client. It may be client approach you for an audit, and once you know it's a first audit for the client, then it's up to your decision. You will go, you will accept the audit, or you will not. Once it's not a first audit, it's a second, third, or fourth, then you have to get the permission from client to contact with the old auditor. If he grants you, then you have write an information to previous one auditor and need the reply for, and relevant information is provided, then you will can say yes or no for an audit. You have to get the permission from the client to contact with the previous auditor. When the client allows you, you have to write the information to the previous one auditor and he will respond you, provided you the relevant information. Now you have again make the decision for the audit to say yes or no. Let's suppose in the second stage the permission is not granted to you. Similarly, simply you can understand it decline the appointment. You will or you can say no audit will be conducted between you and the client. And if you have the no relevant information provided by an old auditor, so give old auditor notice and use information obtained in other ways. As the auditor, the previous auditor is the responsible to provide the full information to whom he make an audit for. Engagement letter, very important document before we will go for it. Once your acceptance procedure is done, here is attachment of engagement letter. Very important document. It's a document define auditors and management responsibilities. In this type of documents, I can say it's essential contract between auditor and client. What auditor to do and what auditor expect client to do. Mention in this document, in this contract. It may be in the middle of the audit, the client would say, "Oh, I don't want to do this. I don't want to declare this information." So what happened? So this is the responsibility. This is the initially have to mention the management responsibility that they clear each and every they are answer for each of the query arise from you. So management responsibility you will mention in this contract will be yes, we studied the management responsibilities are prepare the financial statement according to the standard. Management responsibility is a good system of internal control. Management planning responsibility is protecting the fraud. So auditor duties, what? Yes, we know that auditor duties, he have to conduct a true and fair evaluation and generate opinion for the financial of the company. Before we go to the door, the contract is in your hand, yeah, in your place. Before this, you have to go for an auditor. This agreement with you, written evidence of auditor acceptance, sent to the board of directors or audit committee prior to the first audit. Identify any reports to be produced in addition to the audit report. Engagement letter. Look, this slide is declared, or you can say more explained in this one slide. Engagement letter. The purpose of engagement letters, as I told you, is the contract. It's a document contracted between the client and the auditor. Do for do and for do not. So objective of audit. We know very well objective and audit is true and fair view of financial statements and stop or mention the fraudulent activity. Test nature reasonable insurance on the basis of you have to show in your responsibility that you will test and give the reasonable assurance, not the granted but reasonable on the basis of reasonable evidences. Unrestricted access to the court. In the contract, it is mentioned unrestricted access to the record. There is no restriction for access to the record. You can access all of the information in every department or each of the state where you need to require, and all the queries are entertained to you being an auditor. Confidentially of the reports. Here the client advise you that you have to kept confidential reports and do not disclose to the others. Mean that auditor is bounded over here. Auditor do not show the audit report to the bank directly or to the government directly or to other investors or lender directly. He can only do this or he can only show this data after the permission of the client. So if the client is not giving the permission, so auditor do not. So confidentially keep the reports with him. Applicable reporting framework. Talking about the IAF, IAS and IFRS. Auditor and the client need audit on the basis of such standard defined by the chart of account, IAS and IFRS. Planning. Planning is very important. You have to plan you mean to say that when you will start your audit, when will you start, when you will end the audit. Maybe client advise you when you have to start the audit, when have to end accidents. So This is the mention in the agreement letter or agreement engagement letter. Fees, yes, there is a fee. There is a fee. There is an amount of the services of an auditor mentioned in this internal audit. Auditor advised to the client that he will need the services of internal audit, as the internal auditors know well about the departments, well know about the financial information, well know about the financial cycle of a company. So internal auditors sort the problems and help to the auditors quickly, or you can say confidentially, or you can say in a proper way. So internal audit needed during the as the auditor rely on the internal audit. Internal auditor are the employees of the company. Thank you. This is from today lecture.